So the Bank of Canada again announced that they're not doing anything with interest rates. They're going to keep it the same because, I guess there's really no need to drop rates. The inflation's kind of under control, and yeah, the economy is suffering, and people are going through some rough times right now. And you're going to see in all the media how it's bad to own real estate, and it doesn't make sense, which I kind of agree with, at least in the short term. But in the long run, it still will make sense. Hear me out.
Look, I get it. The Toronto real estate market is confusing. Whether you're a new or experienced investor or just looking for a home to raise your family in, join us at Broadview Table Talks as we sit around the table with my friends to talk about the real estate and the ever-changing market in Toronto.
So if you think about other tenant-friendly cities like Germany, Sweden, France, Europe, basically a lot of Europe, Canada's kind of getting there, like Toronto's getting there, at least in the GTA. I just never expected it to happen this fast. But if you think about it, prices were rapidly appreciating over the past 20 years because we had 2 decades of low interest rates. Everybody jumped on the speculation train. We kind of forgot about the first principles of real estate investing, which is cash flow, being cash flow positive. But the option, if it wasn't cash flow positive, which many weren't, up until like a few years back anyway, like what else are you going to do? Not get onto the gravy train? That's what happened, and that's just the way in the past. This is the problems that we're in today. And now we're kind of in a weird crossroads where, yes, there's a housing crisis because there's not enough homes, but at the same time, there's a lot of available inventory. And there's just, how does that even make sense, right? Where it actually comes down from is really affordable housing, or housing that you want to raise families in. Because a lot of the stock out there is just the entry-level condos, the 1-bedrooms, the studios, maybe even some 2-bedrooms. But the larger stuff that you can raise families in affordable prices, it's pretty rare. Like nobody's building that anymore because economics just don't make sense to do that. If you think about all the fees that go into it, like even if you got the land for free, the numbers don't make sense anymore. Government regulation, which is like a third of the cost between all the different levels of government. Then there is the cost of construction. If it's low rise, you're looking at $300 a foot minimum. And if you're doing concrete based and high rises, you're looking at $600 a foot. Even profit as well also needs to be accounted for the developer to actually get started in this project. Otherwise, why would they risk all that they're risking to make something happen? The cost of construction would be minimum, at least for high rise, minimum $1,000 a foot. And if you can't even sell it right now, like resale is going for $800 a foot, maybe even $900 a foot, depending on what area you're in. It doesn't make sense to build new construction anymore. Like the numbers aren't there. However, what's actually happening is purpose-built rentals because of federal funding from CMHC, which gives long-term financing rates, amortizations of 40 or 50 years, depending on what type of construction you're building. That is actually propping up the purpose-built rental market. More and more, we're going to shift away from individual mom-and-pop owner owning 1 or 2 units of condos, 1 or 2 bedrooms, and into these institutions or larger investors, maybe some mom and pops. For the most part, it'll be funds buying in these 100, 200, 300 unit purpose-built rental buildings. This was a shift from back in the 70s when purpose-built rental was the only housing stock that was available for rental anyway. Eventually, the condos got introduced in the 80s and more so in the 90s. Individual investors wanted to get a piece of that action. Well, we're shifting back to the purpose-built rentals because of the favorable financing rates and because new construction condos don't make sense to build anymore because nobody's really buying them. So we're going to see more and more of that kind of housing stock being built. We're not going to see houses like new semi-detached or detached houses that you can buy, at least in urban areas. Maybe if you go to urban sprawl and further out for low-rise housing, you're not going to see that in the city because there's no more land. Like, it doesn't make sense to have a condo site and build a single home on it. You're going to build vertical. It's just the way it is. If nobody wants to raise families in that, I shouldn't say nobody, because there are a lot of you out there that do raise kids in 3-bedroom condos, or even 2-bedroom condos, or even 1-bedroom, 1+10s, and you make use of the amenity space for living space for kids. Right? Like, more and more we're seeing children's playrooms, and I've seen them in use. Like, there's one condo in Leaside that I can think of right now off the top of my head that we just had a listing in. It's kind of cool to see 11-year-olds go down to concierge on their own just to pick up packages. It's really cool. Of course, there's a children's play center in that area. Buses that drop kids off and pick them up from school as well too. So vertical living will be the new option for people to live in, to raise families in, but not everybody wants that. So there is less and less demand for it. It's more so because the fundamentals of real estate investing don't make sense because the yields are so low. By the time you factor in the mortgage, even if you don't have a mortgage, you still have maintenance fees and taxes from what you get from that versus investing into like a GIC or just any kind of index fund or whatever, you're going to be looking at 3 to 4% maybe. If you're looking at a single condo, it's probably around 2.5 to 3%, which you're going to get way better yields if you invest it into the markets, into equities, or into just something more stable. If you get a multi-unit, you're looking at 4, maybe 4.5%. If you build one, you're maybe looking at 5% in Toronto. Those numbers aren't that great for the amount of risk you have to take. There's going to be less and less individual landlords. This is kind of akin to if you go to Paris, you're going to see a lot more government or institutions providing the housing. And we're kind of getting there. With Mark Carney's plan, with those prefab, purpose-built rentals, that's going to be all socialized housing. That's going to be all government subsidized housing, if anything. Maybe they aren't the ones building it. Maybe they're subsidizing the corporations to do it. But ultimately, like, it's not going to be you and I buying these places. If you hold real estate or you bought real estate with the purpose or the intent of being rich, of being a landlord, having the property pay itself down because tenants are in there, like, just by the sake of having a mortgage for 25 or 30 year amortization, just being able to hold it, it'd be paid off in 25 or 30 years. Like, that was the original thesis anyway. Maybe with the CMHC stuff, you got MLI Select, you have a 40 or 50 year amortization over that time. Maybe you won't pay it off because you won't hold it for that long, but at least certainly you'll be able to take a big chunk of the equity growth. Also, the price will appreciate somewhat. I think if you can just hold on for the long run, it still makes sense to do that. And remember, real estate is a long-term play. Like, it used to be when times were hot that you could flip properties and make a decent living, but that's kind of gone now. And you can go back to the original fundamentals of long-term hold, because like anything, it'll just appreciate over time because it'll last longer if it's built properly, just by the nature of inflation itself. If the currency is being diluted at 2.5%, anywhere from 2 to 3%, as per the Bank of Canada, that means that same $100 that you have is just going to shrink by 2 or 3% every single year. Just by virtue of that, it's going to go up in value, and it's going to take more dollars to buy the next real estate if you need to buy it. Not everybody wants to rent. Some people do want to own. Not every single type of real estate out there is an investment property. There is a lot of end users. I just think that the real estate game is not over. It's not going to die. A lot of people are hurting, yes, for sure. It's not as compelling as it was before, for sure. But again, it's just all a cycle. At some point, it's going to come back around. When immigration opens up again, when the government realizes that they need foreign money to buy, we're realizing that our birth rate's declining and we need population growth and we need workers to prop up CPP, the Canadian Pension Plan, to prop up the social, to take care of the elderly. I don't know if you know how CPP works. It's not like a fund you just grow and draw down from in the future. It's like, it's just in time. It's like the CPP we're paying today goes to fund the people that are retired now. Right. So I just think we'll need to have more and more younger workers. The immigration can't be zero forever. And in fact, there was just a stat that said that there's 817,000 people like let into Canada as new immigrants. I don't know if they're already in Canada and then converted to permanent residents, but between permanent residents and temporary foreign workers, there's 817,000. In the high years, 2 years ago, and the year before that, there was 1.2 to 1.3 million people into the country in Canada. We're halfway through the year and more than halfway of that amount now. Eventually, there is still a fundamental case for strong real estate prices to continue to grow up, whether it's inflation and strong demand. Interest rates going to have to come down at some point, maybe not today, but certainly for the end of the year, there's going to be 2 or 3 more cuts. With the economy like this, the Bank of Canada has to cut at some point just to stimulate the economy. That's my thoughts of real estate. Bit of positive news for you real estate owners out there, because I know times are rough. People are not doing well, but if you hold long enough, you'll be able to weather the storm. That's my 2 cents anyway. All right, thanks for watching. Catch you next week.
Add it up.
Thanks for sticking out to the very end. I hope you got some value out of this. Do me a favor, please press like and subscribe, but more than anything, leave me some feedback so we know what to produce for you going forward. Thanks again.